Good evening, everyone. I hope you all are having an amazing weekend. 3 days, much needed. Uh, and I hope you took some good rest and are ready for the new week and also the new OPEC cycle that starts off after last week. OPEX to OPEX, right? Like March again. A small topic I want to discuss about today is understanding timeframes and how to trade different time frame charts, right? Like the reason why I took this up is I had people come into Discord or talking on Twitter saying, hey, this is your 65-minute chart that you have posted. That's fine. But then 2 weeks after, they show me the same chart and say, you said this 2 weeks back. And I'm like, okay, but you're looking at a 65-minute chart, which gets invalidated in a day. Sometimes in Discord specifically, I have people who do a lot of Discord hopping. Right, they come and go out. They expect a certain gains in a week or two, and then obviously expectations don't match because sometimes market it's a rotation scheme. Sometimes you win, sometimes you lose. When you're losing as little as you can, when you're losing and making more when you're winning is when you can make it in the market, right? That's essentially what it is. So these people, specifically these people, right? Like I tend to get this question quite a bit, where I'm showing them a 5 minute chart. I clearly say, hey, this is the 5 minute chart. This is what you can expect. They come back and let me. I share that in the first hour or the second hour of the day. They come back at the end of the day, show me that little snippet of commentary that I put in, and they say, "Hey, you said this, and what the hell?" So it doesn't like these things kind of don't bode well because you have to understand the time frame that you're trying to draw information from, right? Like you the lower the time frame, the faster and more adaptive you should be with respect to your mindset, right? So that's an example that I want to show, and some things that I'll later on talk about as well is like how do you want to trade SPX, how do you want to do 0 day trading per se. People have been talking about these huge gains in SMCI that they have made on Friday and things like that. It's good. I mean, like I have seen moves like that in the market. I have caught those moves myself in the market, and they always happen. So how do you want to catch them and things like that? That's something that I want to discuss very quickly, going over a very simple on demand commentary that we had on Friday. Like I'll go over that and show you where your entry points and exit points should be based off how the candlestick patterns are on a specific time frame. And once I get onto the SPY or QQQ on our weekly analysis, I'll also try to show you what's happening there, right? So that's essentially what I want to go over to start off with. Without further ado, let me start off with what I was talking about. Firstly, let me go on to our game plan channel. This was something that we were talking about on. Let me go. Yeah, this was something that we were talking about on Friday. You can see the date 2/16. In the lounge we were talking about a big move coming, right? Like there was we were waiting the entire day. There was a big move that was brewing, and then Professor Finisher, he said, "Hey, there's a big wedge that's forming." Like what does a wedge indicate? A wedge does not indicate that you are going up or you're going down. You're basically trying to see that there is a compression in the market, and then there is going to be an expansion because market moves in compressions and expansions, right? So you are getting ready to capture a move, right? On a 0 day, especially when you're trying to trade SPX. I definitely don't try to trade SPX at the start of the day or whatnot. It's usually after I collect enough data, enough information for myself to say, okay, you know what, I can probably play SPX for I mean, you can't really alert these per se on an alerting service also, unless and until like I'm live streaming for you or something like that. Even then, it's quite difficult to even alert those. But then you can definitely create a system for yourself to, and the system that I'm going to talk about today will help you in different things, and I'll show you an example too. So we were discussing about this wedge that was forming, right? So then when the wedge was forming, this was what happened. We saw the wedge was breaking lower, right? So when you see the wedge breaking lower, that is when you want to enter into a trade. So what I mean by wedge breaking lower, so I do have another screenshot here which looks very good. Where should your entry point be here, right? Like you saw what the let me go back, let me show you. You saw how the compression looked like. This was the compression that was happening in the market, right? Like this is what was happening in the market. You see that there is this sideways movement. There's a nice little wedges that were formed, like and breaking up above will shoot higher, breaking down below will move lower, right? That's essentially what a compression or a wedge means, right? So now like after I posted this, let's say a couple of minutes after, right, like about 4 minutes after I posted that, you see this timestamp here, like wedge breaking lower. That's what I was telling folks. And if you have a system built out, I'll show you a lot of commentary around like how people were able to catch this move. But then if you are seeing it, where is your entry point going to be? This is where your entry point is going to be, right? Like once you see that there was the close of the candle under the wedge, that is where your entry point should be. That is where you could have easily captured this move, right? There is a follow through move that will easily help you to understand that, okay, you know what, I'm ready to catch the move. And that single candle that I'm trying to point out to you there, that single candle move is more than 100% trade for you on SPX, 0-day SPX or whatnot. Or let's say you are using a different time frame, let's say a daily time frame. You still can use that for swings. If you use the 65-minute time frame, you can probably use it for an intraday for like 2 to 3 hours. If you're trying to trade and a weekly chart, you can probably go a few months out swings. So depending on the time frame, depending on how you're deriving the data, how much of data are you trying to derive, you can extend your trade for so long and talk about how valid that trade can be in that situation. So for example, when you're looking at this 5-minute chart, you can't really say, okay, you know what, I saw a breakdown and I'm going to go after weeklies or I'm going to go for a swing and say SPY is going down to 490. You can't really say that, right? Like you're looking at a 5-minute chart. It's clearly a 5-minute chart, right? So your trade should be faster. You have to be ready to adapt. So now again, we talked about a compression. We talked about a breakdown. We caught the breakdown. Now where do I exit? So let's come back here. Now you have that hammer candle that is forming. What is a hammer candle? That this is again a 5-minute chart, right? Like you see this candle here. You see this candle here. This candle, some of them, I'll go back on the Traders Lounge and try to show you those comments. Also, some of them caught it for a 250 to 300% trades. Right. So after that, where would you get out? Obviously, it went a lot lower, but I would have got out on this hammer candle. Right. Why would I have got out on the hammer candle? It's a 5-minute chart. You have a reversal candle that is showing up. So yes, there is no confirmation yet on a hammer candle. You definitely want to see some confirmation. But then for me, we don't have time. We don't have enough, leverage on time to say, okay, I'm going to wait out for another candle to see what's happening there. I can't do that. So I'll at least scale out most of my position and hold some runners, or I will if I have a small account per se, I will just get out of the entire position also, right? So that is essentially what you're trying to look for when you're looking for a lower time frame chart. You want to get in, get out. You have to be faster. You have to be ready to adapt yourself. And then when I saw this was where I was also trying to tell you, so again, time frames, you understand what's happening there, and you have a double hammer candle that's forming on the on SPY 5-minute chart. And like I was kind of telling people to get out of their positions. Look at what happened after. Surprise, surprise, there was a huge little a huge buy candle lit up with volume right there. And that is essentially where the panic comes in. Where usually bad traders get into those positions. This is essentially where they get into those positions where they say, oh, it's a drawdown. Then you have like a little bit of a consolidation, and premiums came down a little bit because I was seeing the premiums here. They jumped up 200% or whatnot, and now they are a little bit down. So I'll get in and they'll get out somewhere up here when there's this huge little handle. I have seen this mentality with so many traders through the last 3 years with sniper trades. It is astonishing. Like people literally are there trying to pick that trade so that they can lose based off 5-minute charts and whatnot, without understanding that the breakdown, like just a rule of thumb, if you want to think about on a 5-minute chart, how many candles is your analysis valid? For me, I only think 2 to 3 is what a valid time frame is. 2 to 3 candles is what will be valid of a particular data extracted off a 5-minute chart. If you're looking at a daily, I would say 2 to 3 days, right? Like 2 to 3 candles on a 5-minute is basically 15 minutes. On a daily, I would say 2 to 3 days. On a weekly, I would say 2 to 3 weeks. So things like that, so on and so forth. So you have to be ready to adapt. You have to be understanding. You should understand that when you're trading off a 5-minute chart, when you're deriving data off a 5-minute chart, you don't have as much data to predict what's going to happen the next day. You only have as much data to predict what's happening in the next 15 to 30 minutes, maybe. That's mostly it. So you have to understand that. Like most people just don't get it. Like plain out, they don't even get it. They just think, oh, I'm seeing this on a 4-hour chart. I'm going to say the next hour is going to do this. It probably can, but you're on a 4-hour chart, so you have to probably give it 8 to 12 hours of time for it to materialize down, right? So the patience to hold on to a particular theory that you have developed depends on the time frame that you are trying to derive data. The adaptability of your mindset to scale out of positions also comes from the same time frames that you are trying to trade as well. So again, the same thing, right? Like once there is this break, I was talking about adapting, right? So what do you want to adapt here? Now you want to see if this downtrend that was created is completely going to be breaking out. So now we have adapted ourselves to say your next trade will be the break of the upper trend line on the calls. So once you break, this is still valid data, right? Like this is still valid data. This has been invalidated because now you had that breakdown, and it has let's not say invalidated, but it has been validated by your thesis that when it breaks down, it kind of drops, right? Like that's essentially what it did. So now you still have this particular trend line which is ready to be broken out. Like if it does break out, you can catch a move. You can basically play calls, right? So essentially what that was, you see what happened here? The candle just did a peekaboo, right? Like it barely, like it was trying to break out there, and then look at the move. Look at how clean the move was, right? So you understand how I'm trying to trade these time frames, right? Like I'm trying to say, break down 5-minute, my mindset completely changed from the first time I said we are breaking down where I was saying that at 10:58 or 11 a.m., right, on a 5 minute chart, to 12 p.m., I'm now looking for calls suddenly. So why am I doing that? Why? Because I am working off lower time frames. My mind has to adapt itself to say, I am done with that. Now I need to do this. And it's not easy. Like, it's not easy to say, you first year into your trading, it's not easy to say, okay, I just played puts. Now I'm going to go play calls. It's extremely hard to do it. It's about trying to understand what's happening in the market repeatedly, sitting at the desk and trying to figure out what's going on, right? So that's how you want to adapt yourself to the market. And then, after that, again, I was kind of using the gex, we were talking about how the market would, the gex billing at 500, how the next drop for spy to 500, that's essentially what we were looking for. But otherwise, I'll show you the exact same scenario that we were talking about on SPY on SMCI, right? Like a hot stock that was dropping like crazy on Friday. So this was almost at the end of the day, like last 90 minutes of the day. How the premiums move pretty fast. And again, on the 5 minute chart, right? Like look at how it was kind of bear flagging, and that's the bear flag that I was looking at, and it was trying to break below. That's where a few snipers, again, this person is relatively new to the server too, a couple of weeks in, and he kind of understands what's happening now, right? Like, and then he tried to play puts. Look at what happened, right? Every like you'll have so many opportunities in the market every single day that you do not have to FOMO on whatever other people are showing you. You can build a system for yourself, build a process for yourself, understand what's happening on different time frames. Just see that, I know what's happening. I know where I can put my money in. This is what my risk is. Boom, make my profit, get out. So that is essential for every trader out there. They have to understand it. And most like, I'll tell you, 95% of the people who are coming into trade, or think the trading is the next big thing, they won't succeed. Like 95% of the people won't do it. Like my own friends couldn't. Like, they are much smarter than me, and obviously they are successful in other things. They did find their niche, but 95% of the people don't do it, can't do it. Just plain and simple, because they never get to the first stage of creating a process. They always want to look for that next big thing, and they look at others doing it, without understanding the backstory of how they got there. That's essentially how people get burned most of the time. And unfortunately, social media is kind of elevating that too, in a way where we are seeing quite a few people completely blowing up their accounts doing so. Like, I was someone just posted something about on an E-Trade screenshot as to how someone was in 1,000 calls of SMCI and did not sell even if they were up so much on Friday, and they were burning their account. But anyway, I hope this kind of this session is a little bit helpful. I'll try to come up with another session where we talk about flags, and how do you determine the measured move of flags and things like that. If you have not checked out how I'm drawing these trend lines per se, the prereq for this particular video is obviously understanding how to draw a trend line. I did go over that in quite a bit of detail actually a couple of weeks back. The video is also available in our training channel. You can definitely look out for that. But these are some very simple techniques that you can follow. I know they sound very easy to say, but then you need to build that process to understand what's happening there, and where to create that balance of your risk reward into playing these kinds of setups. But